Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily cryptocurrency market update. As always, if you are new to my channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening in the crypto space, but also the broader markets. That's exactly what we're going to be doing in this video. This is going to be an absolutely jam-packed one. We're going to be starting the video off with, of course, some remarks made by Fed Chairman Jerome Powell. Now, they didn't raise interest rates yesterday, very much as expected. And I think his speech was very much as expected, but the markets enjoyed this. We'll look at how the markets initially reacted and how they're reacting. I was not in the, or I don't believe they're going to raise interest rates for this fact. And that is the fact that if they up interest rates, they increase the debt burden, which increases the proliferation of the money supply, i.e. is kind of, liquidity injective. So they're doing QT, and at what point does it become QE because of the snowballing debt system that is really on its knees? We're going to be talking about all that, and rather interestingly, towards the end of the video, we're going to be listening to a couple of clips actually from PayPal's former chair and CEO, essentially talking, former president, I should say. Let's get it right. Talking about how Bitcoin could become the global settlement layer and how it's going to become the currency for AI. So I believe there is an agenda out there, and that's a globalist one. And they want this kind of one world government and system. And this is why I'm a little bit skeptical around Bitcoin. And I think a great way to get that would be to kind of collapse and cause all the central banks around the world to fail and to come up with one sort of agreement where they all come under the same roof. We kind of are, or have a version of that in regards to the dollar-based system, but not perhaps the version that they want. But we'll talk about that all towards the end of the video. So we're going to start the video off looking at Fed Powell's remarks, how the markets have reacted, what the yields are doing, what the debt markets are doing, what this means for us in the crypto space. Remember, we are a part of the kind of markets now. And we're going to be showing a really interesting take on what happened when we had a US ETF and what's currently happening with the Hong Kong Dong, the Hong Kong ETF. We're doing a very similar thing from a price point of view for Bitcoin. And I do think eventually this leads to a run-up. It's a very bullish thing, these ETFs, fundamentally. Initially might not be because of the buy the rumor, sell the news effect. But we do believe this is a bull market and there's just a bump in the road. Along with inflation, we think it's just a bump in the road. Inflation's going sideways. Remember, we're going into summer. We're even seeing things like coffee and cocoa come down. We'll talk about all that when we look at Bitcoin more broadly and look at the chart. And then we're going to be wrapping things up with a little bit of news. Michael Saylor, who, you've got to give the guy credit where it's due. I think Bitcoin maximalists are some of the most confused people in the rooms in regards to blockchain and distributed ledgers. But I agree with the maxis in the sense that Bitcoin is the cryptocurrency that is basically a store of value. It's got the best kind of chance of being that, I think. And I'm a maximalist, I guess, from that point of view, albeit skeptical on Bitcoin's origins. And I can see some parallels between how we ended up with the Federal Reserve System in regards to the 1907 banking crisis that the international banking cartel totally caused and engineered, and then they went ahead and tried to put forward the Aldrich Bill and then the Federal Reserve Act in the name of protecting people. These nasty central bankers, they've caused all of this. Nasty Wall Street was the kind of narrative back then. We need centralization. We can't have, we need government kind of control over this or a centralized point over this. But we'll be looking at some huge news in regards to what former PayPal president David Marcus has to say about Bitcoin being the native currency for AI. Very interesting in this world that we're moving towards, and also the kind of global settlement layer. And we also have news, which we'll not get into, we'll say it right off the bat, that the second largest bank in Europe has been buying Bitcoin according to an SEC filing. There's this kind of digitalization, this Bitcoinization of most things, and it's due to the failing fiat systems, which is where we're going to be starting the video off in regards to Jerome Powell and what he had to say yesterday. So Fed meeting recap. Powell pretty much rules out a hike as the central bank's next move. So I think that was always on the tables. My reasons for thinking that is due to this chart right here. This is the annual interest rate payment of the United States right now, what the Treasury has to pay basically. And It is projected, if they leave rates where they are, to get to $1.7 trillion by this time next year, so in a year's time. We're currently at 1 trillion. That is a snowballing. And if they up rates, they compound that to the point where it's probably going to be at 2, something along those lines. Whereas if they cut it, it drops drastically. So I think the Fed want to cut rates, or the Treasury certainly wants rates to be cut probably more than anything. Remember, they announced, and we had to cut this out this video because there's just so much we could have covered. The Treasury actually announced their buyback program. So essentially they're funding bonds by, or funding their debt by basically issuing bonds and then buying them back on the secondary market. It's the biggest Ponzi of them all. You talk about Ponzi schemes. The fiat systems really have become just that. But to do a little bit of recapping in regards to what he said. So Federal Reserve Chair Jerome Powell said it was unlikely that the central bank's next move would be to hike rates. The comments spurred a rally for the 3 major, with the Dow surging 50 points, so on and so forth. More important thing to why all this surge was because we know what's going on right now. This is the 2-year yields, which we can show you, but we'll probably just show you the chart. This is what happened on the... So rates, the yields are very much spot on. 2-year yields, why do we look at yields and things like this? Well, if we overlay the Fed fund rate, they move in sync. Yields lead the Fed fund rate. And this has been essentially going sideways. I believe this is going to come down. That's going to drive the dollar down. That's going to see risk doing well at a time when there's going to be a lot of spending. We've got this real great macro narrative behind why assets are going to do well. But yields have been going sideways. The rates have as well. And there's been this readjusting, will they, won't they? And of course, the markets have been dancing to that tune. So if you look at where markets bottomed, it's pretty much where yields started to top out. Or you could say when the dollar started to roll. It's all related. And there's been this kind of, with this strength, there's been this kind of readjustment. This is the S&P and baby blue. But yields dropped because there's, this is about where they should be, around about that 5% mark. There's no need for them to go higher until we think there's going to be higher interest rates. And of course, that's going to alleviate a bit of stress on assets. And that's why the Dow and other things rallied. He talks about inflation. He talks about the fact that he wants to see inflation still get there, and they're committed to leaving rates where they are, but they think monetary policy's significantly restrictive. Powell downplays concerns on stagflation. Powell says he wants to shrink the balance. He wants shrinking of the balance sheet to be smooth. So they're actually tapering this off now. So they're kind of doing less QT, which kind of makes sense, I guess, if you give where inflation's at. Stocks rally, as Powell says, move is unlikely. What markets hate really more broadly is uncertainty. And the fact that Jerome Powell came out and basically said, we're going to leave rates where they are until inflation comes down. We don't see the need to hike. You saw yields sort of start to price that in. And of course, on the back end of that, it kind of alleviates a bit of pressure for the risk markets. And Bitcoin is really just a part of that whole thing. Again, this is the reason why I don't think they're going to be upping rates anytime soon. And of course, Bitcoin still having a bit of a correction. I don't know if it really did much. This was the kind of jump that it had, but it's still very pinned. This could be basing out. We're very hesitant to be calling short in this market, because this is a bull market. You're on the wrong side of the trend. We see lots of people really sort of coming out and looking for impending doom. We don't believe it's there. We think if you look at the broader trend, this is crypto. It moves to a way higher beta than risk. It's a part of risk. We know what's leaning on risk. The broader uptrend we do think will continue. We've just got to get through what we think is a bump in a road, not the start of a broader kind of shift of things in regards to inflation now spiking up. Inflation isn't really spiking up. It's really just broadly going sideways. If you look at CPEs, PCIs, even if you look at things like oil, yes, you do have things like cocoa and coffee that have done quite well. There's a number of others out there, but if you look at nat gas, it's at real lows, so on and so forth. Wheat. It's a mixed bag and it's generally just going sideways, not up. People calling for that second wave of inflation, I think are prematurely calling it and really just guessing. Let's see that and then we can change our narrative. But for now, we think inflation really broadly certainly is in a downtrend. It's going sideways at the moment. We think it continues to go down. We think financial conditions continue to get better and better. And you've got this kind of bull narrative in regards to a lot of the things we've looked at and certainly technically what we're looking at. Something interesting to sort of show people was what happened when we had a US ETF and the actual trading of it. You can see Bitcoin went down, but then resumed the broader uptrend because it's a very bullish fundamental thing that's happening, but you get the buy the rumor, sell the news sort of thing. Similar thing with the Hong Kong ETF. So I'm reluctant to call for any kind of major downside with crypto right now because I'm not sure you're going to get it. We've had a significant sell-off for altcoins. We've had a significant sell-off for Bitcoin. Remember, our really important chart is the total 2. So we want this to form a right shoulder that's going to give us that $3.7 trillion market cap for everything in the cryptocurrency space, excluding Bitcoin. It's nearly it's a 3.7x from where it currently is. Certain altcoins are going to do amazing in that. My personal concentration for sectors in the crypto space that I want to be a part of, we own a little bit of gaming. By the way, become a Patreon, guys. We've just started our 1 to 100,000 challenge. So 1,000 to 100,000. Not guaranteeing anyone they're going to make 100 extra turns, but I've picked 5 altcoins that I think stand a damn good chance of doing that. Certainly, if our targets get hit, that will get us to over that 100,000 mark. Do become a Patreon, check that out. But the sectors for me that I'm super interested in, even our 1 to 100x altcoins are largely in this sector. I have a bit of gaming. I have a bit of, some of the layer ones that I think are going to do best, so on and so forth. The real sector for me is AI and what will enable AI, what currently enables the internet and is going to be a vital part of Web3. And that's things like compute, data storage, this kind of deep in narrative. I think that's, one of the most bullish areas to be when it comes to the cryptocurrency space. So we've gone on for quite a while. What I want to do now is actually dive over and we'll play these a little bit fast forwarded to MicroStrategy's conference, or a conference put on by MicroStrategy, and listen to what the former president of PayPal actually has to say. So let's dive into clip number 1 of him talking about Bitcoin becoming a global kind of settlement layer, and then talking about the AI. Second clip will be talking about AI and how to be the native currency for that. And then we'll wrap the video up.
Well, so once you build the conviction that Bitcoin is the neutral settlement network for all payments in the world, you know that it's secure, you know that it's decentralized, you know that its value can't be messed with, you have to make it fast and cheap. And so Bitcoin is very secure on layer 1, but it's slow. It takes 10 minutes for a new block to be added, about 10 minutes. And the fees, especially now that there are more things that are being published on the Bitcoin blockchain, the fees are quite high. And so here comes the Lightning Network, which is basically a payment layer 2 on top of Bitcoin that enables really fast, like near real time and really cheap movement of Bitcoin. And when we started that journey almost 2 years ago, we realized that Lightning was actually great at a theoretical level, but really hard to operate for mainstream companies. And so what we did at Lightspark is we built an enterprise-grade platform that enables companies to connect to the Lightning Network without any of the complexities of running a node, deploying liquidity, opening channels, finding routes, splitting payments into smaller payments, and reassembling them on the other side to make sure that they arrive at the right destination. All concepts that are quite foreign for companies that are just looking to connect to an endpoint and send and receive transactions reliably. And so that's what we've been doing. And we're very happy that actually this week Coinbase started launching support for Lightning on our stack. So that's a major milestone for the network and also for our company, bringing one of the largest exchanges in the world with 100 countries and about 100 million customers onto the network, which is a big milestone for us.
So a quick comment on all of that. Actually, within Satoshi's white paper, in the opening statement, he says people shouldn't try and tamper and add take anything off the actual main chain. So there is a little bit of contradictory nature there, but if Bitcoin realistically wants to scale to become a global payment system and the actual layer 1 becomes a kind of settlement layer, kind of like what we're seeing Ethereum and many of these other blockchains be the kind of security layer, then it needs to go off chain. And there are people that would say, actually, if the wrong people are behind Bitcoin, they'd have deliberately designed it to be a little bit lame and not be feasibly able to be a global payment system. But these problems are getting solved, perhaps not in the way Satoshi would have wanted, by the things like Lightning. Coinbase recently just integrated it. And of course, Bitcoin, what he's really talking about there is Bitcoin becoming the settlement layer. So things are done on the layer 2s and then it's kind of all backdated onto the layer 1, which is interesting. And the really interesting one, because we're moving towards a different world. AI is going to displace millions, if not billions of individuals. The question is, what do these individuals then do? Even though I'm not a fan of Yuval Harari, I have read both of his books, or 2 of his books that I thought were very good. Sapiens, a good one. And 21 Lessons was another good one. But he often talks about how AI is going to displace millions, if not billions of people. What does an economy look like where there's less, jobs aren't, there's less need for people to actually go to work and do things like this? This is when you start to talk about things like UBI, et cetera, et cetera, et cetera. What does that economic model look like? What does money play in that model? These are all questions that I think we want to explore in a channel more broadly over the weeks, months, and years ahead of us. But what I want to do is now play this clip of the former president again of PayPal talking about Bitcoin being the currency for AI and why that might be the case.
Something that requires the friction of converting non-digital money into digital money. So it has to be digitally native. And no one in the world will accept any form of native digital value that's not maximally neutral. Right? Because it's not like the Europeans are not going to accept an American version of a digital asset or vice versa. And so what is the most neutral form of digital native internet money? It's Bitcoin. And so if you make it super efficient, super fast, real time, at the speed of AI transactions, that's basically going to be the native currency of AI. And then it's kind of this interesting thing where a few years ago, there was this article that blew my mind that Google Translate built AIs to do the translation service, which is really a mind-boggling service when you think about it. 20 years ago, like a thing that you can talk to and speaks another language. It's pretty remarkable what they did with it, with this level of fidelity. But they figured out that this AI that was actually using unassisted learning, unaided learning, came up with its own language. And it was kind of its own neutral language to basically translate one language to another using its own thing. And so what is it going to be for value between AI agents? Definitely Bitcoin.
So there we go. Interesting stuff. I want to know your thoughts in the comment section. Again, just to kind of reiterate my point that we try and continue to reiterate is we're not really seeing anything out of the ordinary for a cryptocurrency bull market. I still do believe this is a bull market. I think we ran into a kind of bump in the road with inflation going sideways, the uncertainty around that. You saw markets sort of breathe a bit of a sigh of relief on the short term in regards to Jerome Powell squashing a little bit of that uncertainty. That's how markets are. That's a short term one event, but generally there's uncertainty around inflation. Once they get the clarification, just like we saw yesterday with that sigh of relief, it happens on more of a bigger scale, and this broader uptrend for risk assets resumes, and the broader downtrend for kind of the non-risk assets or the things that lean on them, like the fiat systems, certainly the yields and the dollar, the broader downtrend for them, I do think, resumes. So that's all from me, ladies and gentlemen. Thanks a lot for watching. I look forward to seeing you all in the next YouTube video.